Hello traders, Cory Mitchell here, and this is your swing trading stock market outlook for the week of March 24th. If you're ever wondering where this article is, it's updated each week. You can go to tradethatswing.com, stocks and stock market analysis and trades. Let's get to it. Not much has changed since last week. Overall conditions still a little mixed. Actually, probably a little more bearish than ideally would like, but there are a couple things which are a couple positives. So, could consider a little bit of long exposure. Gold stocks still acting well, so minimal long exposure outside of gold stocks. Gold stocks have been pretty good. Bitcoin still hasn't turned bullish yet, so avoiding that, and gold remains in the uptrend. As mentioned, there are some swing trading watch lists you can check out. Best swing trading stocks list for March. That's high momentum stock names, and these other ones are things you'd maybe look at for a little bit broader perspective or what has been doing well over different time frames. Let's look at how the indices have been doing. This is QQQ, NASDAQ 100, NYSE Composite, Russell 2000, and S&P 500. Like to look at a few different indices because they focus on slightly different things. And this one, and this is the Canadian index. So Canadian index and the NYSE Composite looking kind of similar. Basically, we're in the back toward the middle of this range we've been in, whereas the NASDAQ, S&P 500, Russell 2000, they broke below their ranges. So definitely downtrends in these guys here. These ones holding up a little bit better. Russell 2000 fairly weak. And yeah, we're kind of at that point here where we get to see, do we roll back over or do we have a nice push up? The challenge will be is, can it move back up into this old range? And if it does, that is a good sign. The Canadian index and the NYSE Composite, they're still in their ranges, so that's good. By the time these ones get back up into their ranges, the NYSE Composite could be back at its high. If it continues to move up, that'd be a bullish sign. And yeah, same with these ones. If they can move back up into this range and especially hold this old level, that would be something I would like to see. Bitcoin, kind of based on these same kind of ranges, it broke out of its. It is holding below that old range, this big box. So it would need to, it could form a bullish signal down here if, maybe we get some more drops and then it starts moving up. But at the moment, from where it is, I would want to see this start to move back up above this kind of 92-ish, 92,000-ish area. Gold still very strong. Last pullback was a good buying opportunity. Same with the gold stocks, and we're looking at that again. This one, we're starting to pull back. Well, we don't know how far this pullback is going to be. It could be very brief. We don't know, but it's an uptrend. So the kind of pullbacks and patterns that form in an uptrend are potentially tradable, and that goes for the gold stocks as well. Market health indicators. Just another thing we can look at to see how it's going under the hood. Don't worry about volume here. That was due to options expiration. Volume, not important to me at the moment. It is important in the sense that within the next couple days here, so we're several days into this rally, right from this point here. That was the first higher low. So between about 4 to 7 days, you can go up to about 9-10 days. Once that rally starts, a follow-through day is a big push to the upside, like 1.25% or more on the S&P 500 with increasing volume. That'd be great to have in the next couple days. This huge volume day due to options expiration is going to be, a little bit hard to determine exactly what volume is. So I'll probably just look at what the last few days were prior to it. Did we get a little bit of a volume bump, or is at least volume good, and we get a nice strong price push in the next couple days? That would set up a follow-through day. That's the only reason I'd be looking at volume right now, especially on like the S&P index. ROC, this is rate of change, how much the price moves per day on the S&P 500. The basic premise of this is downtrends and choppy trading are characterized by high volatility, big daily movement, whereas uptrends are characterized by really small bands of movement. And we are still in a choppy type environment. We did have a big upside day recently, but we also had some big downside days just before that. So we're in choppy conditions. It's volatile. It's, jumping up and down. That's not ideal uptrending behavior, and this is not characteristic of an uptrend. So that's a bit of a negative sign for sure. NYSE advanced decline line, how many stocks are advancing versus declining as a cumulative number. This is holding up very well. So we are pretty much near its highs while the S&P is well below its highs. If you look at where it is, it's kind of just below where all these little ridges are, these prior lows. So that would put the S&P kind of back up into this area just based on where the advanced decline line is. Of course, the advanced decline line could deteriorate or the S&P could catch up to it. But right now, this is showing that maybe these indices are showing a little bit more weakness than what is actually out there. And we can kind of see that by the NYSE index as well, which is a very broad measure of all different types of stocks, different industries, different sizes, and it's holding up quite a bit better than the S&P 500. This is up volume divided by total volume. It lets us know when there's extreme upside volume, or if it's very low, that means there's a lot of downside volume. And we did have a 90% upside day around mid-March. And that just means out of all the stocks, out of all the volume in all the stocks, 90% of the volume occurred in stocks moving to the upside. That just means a lot of money got pushed into the market, and those are generally good signs. Those generally occur within about 10 days of a market bottom. Not 100% guaranteed or anything like that, but that is a good sign that we had that 90% upside day a little while ago. And we have been moving up since, so we need to get that continued push to the upside. It is possible we could get a little, move back down. We'd maybe still be within that 10-day window when it tends to occur, but, we could dip back here for a few days. The thing that would negate it is if you start getting 90% downside days or two back-to-back 80% downside days, which are similar to a 90% single day or two 80% days. That would basically negate that signal if we started getting them to the downside again. This is number of stocks or percentage of stocks above their 50-day moving average. 33% of S&P 500 stocks are above their 50-day moving average, and only 29% of all U.S. stocks are above their 50-day. So not an easy money environment to be picking out long stocks. Most are below their 50-day, would be in short-term downtrends. So that's not ideal. It's going to be easiest money, easy pickings when most things are moving up during periods like this. And as you can see, the S&P was moving up. Most stocks would be moving up. So this one, not ideal. We want to push up. It's also not, this is not a indicator that you would look at to say when it hits a low level, it's a buying opportunity. This will sometimes get extremely low. Sometimes it'll bottom out at 10, sometimes it'll bottom out at 20, sometimes it'll bottom out at 30. It's not a reliable indicator to say, hey, if it's really low, that's a buy point. I just like to look at it as, is it above 50%? If most stocks, like more than 50%, are above their 50-day and everything, the other health indicators are good, it's usually a lot easier money to make long on the swing trading than if most stocks are moving down. So we discussed all that. Sectors on the move. There is nothing that is moving well over all three time frames. Lately, energy, communication services, they were kind of hottest last week. And then if you want to go down to the micro scale, Materials is kind of in the middle here. Yeah, middle there. Doing a little bit, probably the best over the last, it is doing the best over the last month, close to near the best over the last 3 months. So materials doing pretty good across all three, but you wouldn't want to really look at the whole materials sector per se because it's not super strong, but the gold stocks within that sector are doing well. So you can zero in on those industries that are doing really well. So what I'm doing right now, just enjoying the volatility, day trading. We'll consider some long exposure in individual stocks. That's outside of gold because the gold stocks have been in play for quite a while. They're doing pretty good. Bitcoin's still dead to me for the moment. And that's your swing trading stock market outlook for the week of March 24th. Happy trading out there.